The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 10th. Wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should always be pioneers of our future versus prisoners of our past. So as we begin our day, let's always remember that life happens for us, not to us. What a small little shift and what a big difference it will make in each of our worlds, because when we understand that life happens for us, it means that we can find the gift in every set of circumstances, because circumstances, folks, they are like the wind. All we've got to do is learn to plant a good sail and then enjoy the ride. Of course, we always want to remember, if you're one of those folks that's trying to create a breakthrough out there, there's really 3 steps to creating any kind of breakthrough in anything it is that you're doing in life. Step number 1, you've got to change your strategy. If you're looking for a breakthrough, the old strategy's not working, right? You just got to change your strategy. It's really not that difficult. Number 2, you've got to change your story. That's maybe a little bit more difficult because each of us have a story. That story is why you're using the exact same strategy you are. Number 3, you've got to change your state. Now, that's real easy to do. All you've got to do is, sit up, stand up, put your shoulders back, take in a deep breath. That's the big part of it. Change your physiology, change what it is that you're focusing on, and make sure you use the right words out there. Hope everyone out there had a terrific Tuesday. I know I did. And as always, it is my pleasure to be with you. I am grateful for your presence here today. I'm here to serve you. That means just give me a call. That's the best way for me to serve you. Give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures. They're off about 38 points, trade out at 743. S&P futures down about 4.5 points. Trading out at 2,052 and 75 cents. NASDAQ off 4 points. Trading out at 42.86. Back 9, penny 59. Goldilocks back $4. Silver off 14 cents. Trading at 16.99. Light sweet crude off $1.67 this morning, down over 2.5%. That's trading out at $62 out there. We got to like that nice little tax decrease out there. A lot better to fill up your car and not. Remember the days here? It doesn't seem like it was that long ago. You go to fill up your pump. You go to fill up your car, and then it would stop at 7 because the pumps were set. They would be at a $75 max out there. Anyways, don't have that going on these days. If we take a quick peek across the globe out here, we'll see that over in Germany right now, the DAX is up 67 points, about 0.7%. In fact, let's go check in on the DAX out here. The FTSE's up 6 points, so that is flat out there after a big downdraft day. Now, if we take a look at the DAX out here, not really much damage, just like our markets, right? Not much damage. It did gap down yesterday. Just has an inside trading session going on today. What's that mean? Well, quite frankly, in the world of the DAX, if that's what it does, is it has an inside day today, meaning trading within the range of yesterday's range from high to low. Says that the direction that it came from should continue. In this case here, the DAX would say it would make a further retracement. If we go take a look at those retracements, of course, the session is not over. So maybe the U.S. just simply pulls up the DAX and closes that gap. But right now, the DAX, if it continues to trade lower, that would say it would be targeting the 94.29 level out there. And that's what the DAX means. If we look at the FTSE out here, the FTSE down hard yesterday. Of course, most of the markets were down hard, and it was the U.S. market that just simply was a springboard around the 11 o'clock time frame, 10:30, 11:30 for sure. If we take a look at the FTSE out here, what we know is from high to low, meaning from its September 4th high to the low on October 16th. It's made a 0.78 retracement. Is that important? Yeah, I think it's important out there. It needs to bust through that area to make it, setting up the C point of a larger A to B equals C to the downside. Now, in the case of the FTSE, the 6505 level is your 0.382 retracement. I see no reason for price not to at least test that area. If it breaks through there, 6340 would be its number. If we take a quick peek over here at Asia last night, we had the Nikkei down pretty well. Nikkei was off 400 points, off about 2%, over 2%, 2.25% out here. Of course, the Nikkei, that thing has been on fire. This thing had made a little bit more than a 1 to 1.272 A to B to the upside. Looks to me like it really wants to move up to about the 18,556 range out here. Great support for the Nikkei is going to be the low of November the 4th out there, and that's out at 16,720. She closed at 17,412 last evening. Over in China, we had the Shanghai finished up 87 points. That was up about nearly 3%. Now, with the what's going to be interesting about the Shanghai here, this is a daily chart, by the way, that we are looking at, is had this nice key reversal session on December the 9th out here. The move higher, close above that, and that sends the Shanghai. In fact, it's easier for me, it's easier to just go take a look at the longer-term chart to get our price projections on where this is headed to. Maybe I got to switch over to the daily more so than the weekly more so than the monthly out here. Thought I had an A to B equals CD out here. I do. So, man, it's already above that 2. It's way above the 1 to 2 A to B equals CD to the upside. What a powerful looking stock chart. You know, you take a look at the weekly, it kind of puts that perspective from December the 9th into, and it's always so important when we take a look at a stock chart. And look, even I don't do it, even I forget to do it on occasion, but it's so important to go take a look at one level up, one level down, just to get a feel for what's really going on. There is really nothing bearish about the weekly chart for the Shanghai out here. In fact, let's go do that. Let's just take a look at the weekly charts for our, let's go do that for our indexes. Let's go take a look at the Dow out here. You know, just a few days into it, what does the chart here pattern look like for the Dow as we speak right now? Well, if you were to close like this, you've got a bearish engulfing candle on a weekly basis. When was the last time that we saw that? Inside of the Dow, an actual real reversal candle or signal. You almost have to go back right here to the week of that began April the 7th. Nonetheless, still not too much damage as we take a look at the Dow. If I switch over and take a look at the daily chart, though, inside the Dow Jones, we'll go take a look at the other indices as well. What we're going to find is, even though in the case of the Dow, this looks like a hammer candle on a daily basis, it's really not. I mean, it does look like a hammer candle. There's no question about it. But really, it doesn't qualify as a hammer out here, not inside the Dow. Let me explain to you the reason why. Number one, in order for a actual hammer candle to form, it'll look just like this. So it'll look like it, it'll taste like it, it'll smell like this. But in order for a hammer candle to form, you've got to be in a downtrend. And there's no way, when we take a look at the close, when we take a look at the high or the body of the candle on December the 5th and then the body of the candle from yesterday out here, there's no way that one can say that that was a downtrend out here. Now, an important candle session for sure, because price was able to push off of those lows out there. But there were hammer candles that were formed just because there was just, and we'll take a look here. Here's the daily chart here for the ES Mini. Just a little bit, just a slight bit difference in the downtrend. Just slight out there. Look, what's important for the Dow, what's important for the ES Mini, what's important for the NQ out here, if I put the NQ up on my screen, that's probably even easier to identify because there's clearly a downtrend here from the standpoint of the trading session. Let me get my crosshair out here. From the trading session that formed that potential top on November 28th. That was Friday, November 28th, as we came back from the Thanksgiving holiday. So there's been enough of a trend to the downside. But if we look at the daily chart here for the NQ, that's what's on my screen right now. When we take a look at what actually took place yesterday, what you'll see, and this is a beautiful thing. I hope you had a chance to attend John Logan's workshop last night. Because of the great tools that he provides for us, if we take a look at where price moved down to inside the Nasdaq futures on the daily contract, on the daily chart for the daily contract out here, 42.16. And change was your market profile low. The actual low got to 42.16 and change, 42.1675 to be exact out there. Now, how cool is that? Price actually came down, tested the support level, bounced off it like a major trampoline out there, closed back above the 13-period exponential moving average. That's a little dashed line going across my screen. If you're not watching us on Tiger TV because you're listening on your radio or your mobile device at TFNN.mobi, thanks so much for doing that. Remember, You can catch a live stream of this in HD, no less, on your mobile device, on your pad out there. You'll be able to see everything in spectacular color. You'll be able to see all of the numbers. I mean, that is a beautiful thing. And so yesterday, what we saw was price moving down to a level of support, closing back up above a significant level of support out there, that 13-day exponential moving average, and held and formed a hammer candle. That says that from the bullish standpoint, I don't know. I'll go back and take a look. You don't find too many hammer candles out here, I think, inside of the NQ. When was the last time we saw one? I might have to go back pretty darn far. Well, I take that back. We saw one right back here, April 15th, 2014, where the market had made a significant low. We made a significant low again here yesterday. There's a pretty darn good chance that we have. If it's not yesterday, it's today, it's tomorrow, it's Friday. But pretty darn good chance. You don't get signals like this. I mean, you got just a number of patterns that we can put together out here, and so the low from yesterday is muy importante. It is very important. That's a 42.1675, and he closed below that, and then we start taking a look at some kind of deeper retracement. But that's not what we've got right now, and so therefore it's not really no reason for me to give you the numbers of where things could go to at this stage here. I'd have to say more likely what we will see is a market that's going to trade sideways. This is Wonderful Wednesday. Probably trades sideways, pulls back a bit today, tomorrow, and Friday. Remember, on Monday, it was just Monday, when I was discussing with you that, hey, the markets are set up here to give us kind of one of those scary bottoms. That's preferably what we would see out here. And what did we get? By the end of Monday, we saw the Dow move off about 100 points. Yesterday, a couple hundred points or more than that to the downside out there, and then simply rejected those lows. Well, you can take a look at the NASDAQ. The NASDAQ being really the strong dog out here. And if you're wondering, hey, why did price move down to that level and then just move higher? Well, there were buyers that were just simply camped out inside of the NQ out there, just like there were buyers that were camped out at the trend lines inside of gold. They were just nested there waiting to see if gold could go ahead and break its trend. We know that it did, and we'll take a look at that as well. But this is important here, important nuance, important for us to take a look at when we look at the markets out there. So yesterday's low is significantly important. If we go take a look at gold, let's switch over here. Let me switch over to the current contract. We take a look at gold. It's back about $2 right now. Let's put this on a daily chart out here. Take a look at the daily patterns. You're familiar with this. We were taking a look at the trend line that took place here on July the 10th. That was in essence our first touch point. We used as our next touch point the August 8th. That happened also coincide with August 14th from a trend standpoint. That line was drawn in fact, what we've seen take place so far this morning, we saw yesterday a break of that trend with wide price spread, accelerated volume. And what we saw here in the overnight hours, and this is really what you like to see, this is bullish. What I'm going to have to do is just wait till we get, I'll tell you what was also bullish about the daily for gold. This is Steve Rhodes, this is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Gold trading out of 1228. We were taking a look at that before we went into that breakout there. And so what we know about the trend line, whenever you break a trend, whether it's a horizontal trend line or a horizontal level of any kind of resistance or support line, you know, it's always about a change of polarity. And what you like to see is a test of that area. And in essence, remember, we're not here to be exact. We're not about perfection, because we all know that doesn't exist out there. Let other people strive for perfection and do this little crazy eighth in life out there, because you can't get to perfection out here. All you can do is get to extraordinary, outstanding. Perfection just simply can't be attained. It was an extraordinary day yesterday in the market, especially here for gold, as she busted through that trend line. That's the red diagonal line across my screen. Why don't I do this here? Why don't I just take my screen and make it a little bit easier, turn a couple of things off so we don't have to look at those. Let's turn off those moving averages for the moment. Let's turn off the Fib. There we go. Did I turn that off? There we go. So now we've got just a clear, nice little black background, black screen. We can so clearly see that trend line. Now, what gold has done so far today, it's come back in essence and it's tested that trend line. That's bullish so far, as long as gold stays above that trend. And I suspect that it will, but we've only seen the beginning. In fact, if we put the retracements back up on my screen out here, you can see that gold, in essence, came through that 0.382 retracement level. Now, the retracement level that I'm looking at is from the trading session on July 10th. That's out at the price point of 1347. From that high to the low, out at 1132 out there. So if you go from the high to the low, what we know about gold was this extraordinary day here on December the 1st, when price moved up into that 0.382 retracement. That was also moving in to that trend line. It was a wide-ranging bar. It was telling us what? It was giving us a signal that it wanted to move topside. Topside. I think that's one of the words that Tom has coined out there, and that's what it wanted to do. And it finally did that. It finally took off yesterday. What that means to me is that what it should mean to you as well, and of course we'll find out as long as gold stays above this trend line out here, is that it likely wants to make a move to 1265. So you're 1230, another 35 points or so. Could easily get up to the 0.786 retracement, 1301. So the next target, somewhere at 1265, 1301, before maybe it starts to pause. If we take a look at a set of expansions of swing points, that would be the most recent high inside of gold. That's the October 21st level. So if we go from that high to the low out here, that took place on November the 7th. What you'll notice, let me go ahead and turn one off and one on. There we go. So there we can take a look at our expansion of swing point. This gives us a target level of 1290. So 1290 to, now put the other Fibonacci's out there. So you got 1290, you've got 1301, you've got 1265. That's the range where you should expect gold to move to. Nice moves yesterday inside gold. Now if we go ahead and we decorate it, let me turn the fibs off here. If we decorate it, what we're going to see, a beautiful thing is that gold yesterday, close that out there. Gold yesterday, when it came down, it used as a springboard, a resistance area, that TAS market profile high. Old resistance should become new support out there. It tested it, used it as a springboard, and off to the races out there. If we take a look at silver, silver's up 2 pennies this morning. Silver had broken its trend line much earlier than gold. If we take a look at where silver is likely headed to, we'll just come back to this July 10th level down to the low. That was put in out here on December the 1st. Let me move this off to the right out here. What we'll see is yesterday, the break of the 0.382 retracement area. And that's from that high to the low. That says that we ought to see silver make its way up to the 1879 area. You are at 1714 as we speak right now. It, too, yesterday was able to break above its TAS market profile. If we take a look at this, let me clean the chart up here for a moment. Let me go rid of, did I do that? No. There we go. Let's take a look at this. Is really important to note. I'm looking at the daily chart here for silver. We're coming back into this July 10th level, and when silver broke through the support area, support being the July 24th of its TAS market profile, the green horizontal line going across my screen. See how that acted as resistance? Old support became new resistance. Each time we saw gold move lower, we never were able to see it close back above its red line, its resistance level. If it was able to bounce up through there back here in August 28, 2014, well, what we have now actually seen, we saw a little chink in the armor out here for a couple of trading sessions. That was November 25th and 26th. Sometimes a little bit suspect because of the Thanksgiving holiday out there, as silver had broken through that level. But just like you're starting to crack some ice out here, we saw silver break above a resistance area. And then yesterday and then today you are above that level. So we are really starting to see a change in trend by utilizing multiple tools inside of the market. So expect silver to make its way up to its next level. Taking it to the next level, folks, that would be $18.79. Steve Rhodes, TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 58 points. Trading out at 17,741. S&P off 6.5, trading at 2,053. Composite down 7 points. She's trading at 47.59. Russell off 5 points. Boy, that Russell 2000, that was a thing of beauty yesterday. She is down 5 points. Trading out at 1182. DAX up 71. FTSE up 7. Gold back $4. Silver off 3 pennies. Light sweet crude down $1.50 right now. Leading the charge to the upside. Costco Wholesale. COST is the ticker symbol, up about $2.66. Spirit Airlines, SAVE, up a couple of bucks. United Continental Holdings, UAL. United Airlines, they're up $2. You've got the Direction Daily Energy Bear, ERY. That's to the downside. The XLE getting hammered here this morning. You've got American Airlines, they're up $1. You've got AstraZeneca up $1.21. Southwest up 99 cents. All the airlines, Delta Airlines, the airlines leading the market here this morning to the upside. To the downside, we've got Lands End. LE is a ticker symbol, off 12%, down about $6. You've got Yum Brands off $3. Bluebird down $2.40. EOG Resources off a couple of bucks out here. Toyota Motor TM is a ticker symbol. She's down a couple of bucks. Occidental Petroleum off $1.67. Schlumberger off Schlumberger off $1.80. Dow's off 76 right now. S&P down about 8 points. So let's go take a look at let's do the currencies. Let's go take a look at the currencies first. You've got the euro, Japanese yen. Trading off this morning here, if we take a look at it, we saw that key reversal session 2 trading sessions ago, albeit there's a tiny little nuance here. I mean, it truly just made that key reversal day. That is a reversal signal, especially when you're coming at the end of a pattern out here. We saw a little bit of a move lower yesterday, a little bit lower low today. Not much, but it's a directional indicator, and that's why we are also seeing the markets here this morning trade a bit lower out there. The Euro Japanese yen, not a ton in the way of damage out here, but this is one of the liquidity gauges on the market. If we take a look at the actual euro out here, the euro helped to put that energy into the move in gold yesterday. This looks like it is trying to form a bottom out here. The euro still a little undecided. In fact, we just take a look at a short-term trend, right? We looked at these trend lines out here for gold, for silver. If we take a look at a short-term trend for the euro, let me do this here. It just always makes it, I'll clean the chart up just a tad by turning a couple of things off. You just kind of see, when you start seeing the way that these tools work, you'll all of a sudden start saying, hey, I ought to use this stuff, right? I mean, because, you know, maybe you don't understand or you're not sure what's a swing point. Where to start your A to B equals CD pattern, all that. I get all that. I remember that. You know, now it's just second hat. I can teach you how it to be. I can teach you how to do it so that it becomes second hat to you. But that's neither here nor there, right? What everybody can do is draw a trend. In this case here, when we take a look at the euro, this is how important watching what the euro actually does today, because this is going to impact the U.S. dollar index. This is going to impact gold and silver. Whether it impacts light sweet crude, that I still think there's a different game that's going on in light sweet crude, and that's why everybody that is so focused on trying to do a correlation between light sweet crude going down and the S&P going up and saying that doesn't happen. And that's BS. That is 100% BS. It's all before Steve out there, because we can go back to charts. We can find when that correlation didn't occur and it didn't lead to a market crash or some big, huge correction in the S&P 500. So don't believe anybody who tells you that, because I can absolutely tell you with conviction that they're wrong. They are dead wrong when they say that. Therefore, I just come back to my conclusion. If there's something else funny that's going on with light sweet crude, if it is the weapon of mass destruction, financial destruction for Putin, for all of his antics out there, which is what I really believe that it is, then you've got a whole different game that's going on out there, and that's what I believe that we've got. So just don't pay attention to that. I also say, you know, maybe not even trade it out here. But let's come back to the euro. I somehow got off track there. But, boy, when I get off track, I can do it with conviction. I live with passion. Now, we take a look at this trend line here for the euro, and this is important for us to be paying attention to. We take a look at this. That trend line, I'm starting off here, the October 15th high is my touch point. What you'll see is that, and this is what's really key, is that you've got multiple touch points out here to identify these levels of support or resistance. Well, take a look at the high that was formed out here on October 21st. Ran right into that trend line. How about October 29th? Right into that trend line. When I talk, I'm not looking at the body of the candle, I'm looking at the extreme emotion. So we're looking at the wick of the candle. How about the trading session out here from November 19th? Hit it. How about the trading session from December 1st? Hit it. How about the trading session from yesterday? Hit it and rejected it. So we've got the euro just kind of coiling here, and if the euro is able to take this out, that's where you're going to see in my opinion, you're going to see a significant type of movement inside. Look, if you were short the euro and you're paying attention to this trend line, that sphincter muscle ought to get a bit tight. Now, I've got a 15-minute delay on this, so the euro, for all I know, could be up above this level. I don't think that it is, but this is what you'd want to look at on your stock charts out there, for your currency charts, and be paying attention to that, because once we see that move, that ought to put a little bit of acceleration into the metals out here. As I say, black gold, Texas tea, not so much. Let's go take a look at, so that's the euro. Let's take a look at the euro. If we take a look at the Japanese yen out here, see what that is doing. You got the Japanese yen pulling back. That's after making a 1 to 2 A to B equals CD to the upside. As you know, by looking at your Art of Timing the Trade book out there that you've got, the Ultimate Mastery. Did I get that right? The Ultimate Mastery system. If I didn't, my apologies, Tommy. But what we do know here is that when you do a 1 to 2 A to B equals CD to the upside, and that's in fact what the Japanese yen did, typically you're going to do something else. In this case here, it's just pretty much been moving sideways, working off an over-bought condition out here. The pullback hasn't been anything of real significance in the marketplace just yet. It actually looks to me like this is still just a little bit of a retracement here before it decides to continue to weaken against the U.S. dollar. So the yen weaker, the dollar stronger out there. That's all. And I think the yen is... I think it's a second or third weighting inside. I think it's a second weighting inside of the U.S. dollar index, that basket out there. Great British Pound, let's go take a look at that. Basically flat here today. This still is really just been holding this level here, this little hammer candle from the trading session of November the 14th out there. That low, by the way, is 1.5593. Just truly tested, truly testing that hammerish candle out here. Not a really good... signal for me inside of the Great British Pound, other than just knowing where support is as to what it wants to do as we speak right now. If we go take a look at, so you got the market trading a bit lower out here. Let's go take a look at what's going on inside the NQ, right? Let's take a look at the sign, the real strength inside the marketplace out here. This yesterday, getting down, we mentioned this while we were on the air, down here, just as we were coming off the air at 11 o'clock, when the markets were moving lower. In fact, they got to their lowest point in that session between 10:30 and 11. And what we noticed was how the 30-minute chart here for the NQ had made that beautiful seventh wave down pattern. It's such a great tradable pattern. Thank you, Basil Chapman, for providing us with all of that knowledge out there. It just means you can put your stop one tick. That could be the cut, paste, and assemble team that they've got working in their crack accounting department. But if we take a look at Land's End has a nice sign of strength out here that took place on September the 10th. This moved topside with 2.9 million shares. That was wide price spread. That was accelerated volume. That should become a good support area. Good support inside Land's End is going to be that gap. Remember, gaps are your friends because in essence, another way stated, is they're just simply signs of strength out there. So 3607, 34, 24 ought to be the level. Now, the volume on that wide price spread accelerated move was 2.9 million shares. So far, you've done 4.6 million shares. You haven't gotten down anywhere near that level. But if we do see volume continue at this pace, we've only been trading for 14 minutes, you're going to do more than 2.9 million shares. What does that say to us? In that case, that would say that Land's End would be likely trading in a consolidation range. Now, we know where support is. We also know where resistance is inside Land's End, and that's going to be, I probably should put these in red out here, but you'll get the gist. That's going to be the low of yesterday or the high so far of today, so either 47.60 to 46.13. So very possible we're taking a look at a little consolidation level inside of Land's End. Ticker symbol LE. Let's look at the Pioneer. Let's look at Yum Brands out here. YUM is the ticker symbol. That's down about $2.93 out here. They were out with numbers after the bell last night, it looks like. Numbers not showing up on my screen, but let's go take a look at the numbers that matter. Those are the numbers that are on the stock chart. So you got Yum Brands gapping down this morning. It's got 1.5 million shares so far. It's got, let's pull this back a bit, get a better feel for what Yum Brands is doing out here. So this is... let's see. Yum Brands. What we know about Yum is this. This had a sign of strength back here on February 4, 2014. And that is really its level of support out here, which is right in the 63.87 type area. And I suspect that is what Yum Brands will do. We'll try to head down to there. If it cracks 65.87, let me put this on a weekly time frame. See what we've got going on a weekly for Yum Brands out here. If it cracks through that, you've got another swing. Well, you've got this big hammer candle right here. That's a trading session in February. This is the weekly chart we're looking at, February 4th, 2013. The low there, $59.68. So between $59.68 and $65.87 is very likely where Yum Brands is going to find its level of support. Let's take a look at some things moving to the upside out here. You've got Green Mountain Coffee Roasters, GMCR, up a couple of percent out here. Let's switch back to the daily chart. Well, let's leave this on the weekly chart first. first, then we'll switch over to the daily. The daily chart, or the weekly chart, I should say, for Green Mountain Coffee Roasters. Big old key reversal week. That's after forming a little high wave session on November the 10th. High wave session, not a reversal, but just simply a indication that the market has lost its way out there. Well, it didn't lose its way the following week, the week that began November 17th. Big old key reversal, big old bearish engulfing candle, consuming the prior 3 weeks out here. Nonetheless, if we take a look at Green Mountain Coffee Roasters and try to run a trend line here, let's do that. Where do we want to run this trend line? Let's run the short-term trend line first. So there'll be a couple of trend lines that we can take a look at. The short-term, well, I grab that right there. There we go. We're going to use the trading week that began November 11, 2013. And so what Green Mountain Coffee Roasters looks to me like it has done, it just simply come back to its trend. So here's a weekly chart. This will carry over to the daily chart that we do. And this should be at a level of support. Now, this is a trend line that takes us back into the November 11, 2013. So it's a trend that's been around for a little over a year. If we break through that, then we can start taking a look at some horizontal levels of support out here. Let's go flip over to a daily chart, see what we've got on the daily, see what kind of volume that we've got. So yesterday, as this thing moved down, it was with 1.6 million shares. Today, you're up with 192,000 shares. And this thing was, in essence, coming into a level of support. There was some wide price spread, accelerated volume. That was back on August 22nd. That price level was 125.65. However, it never got down there yesterday from a support standpoint, and it was the trend that was its friend, as we took a look at here, as that's where price found support. That's on GMCR, Green Mountain Coffee Roasters. Now, Green Mountain Coffee Roasters is going to have a little bit of a supply line out here, and that's a downdraft on November 20th, 10.1 million shares. So this ought to find some pièce de résistance out at the price point of about 150.57 out there. You're trading at 136.33. If it can get above 150.57, she'll go close that gap, or at least try to close the gap, and that would be the price point of 153.50. GMCR is the ticker symbol. We got the Dow off 102. Let's go check in on its daily chart here. Let's go check in on the hammer candle out here. So the Dow trying to apply some pressure to the market. So this is where we're going to maybe get the real first big piece of information. We'll take a look at that when we get back from this breakout here. Right now, we've got the Dow trade out at 17,687. S&P down 12 points. Steve Rhodes, TFNN, will be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless investor on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow off 123, S&P down 13, Composite off 20. Let's go take a look at the chart I was looking at yesterday as the market was making a bottom. It's the longer-term chart. This is a weekly chart, by the way, of the S&P 500. Now, the green horizontal lines, if you're watching us on TigerTV, the green horizontal lines going across my screen out here, these are the horizontal trading range boundary lines out there. What does that mean? That means if we take a look at price over the course of, this data goes back to 1996. I start this data September 1st, 1996. That way I'm using a pretty decent amount of data out here. And we're looking for the largest number of either opens or closes. We're just using the body of the candle out here. They help us to create these floors, these levels inside of the market out here. And it's a great tool. It's a tool that was brought to us by Bud Rolfs. Now mine is slightly different because I've got this thing automated. It means I can actually I'll get different lines for my weekly than I will for my monthly than I will for my daily. Why? Because the open and close of a daily is going to be way different than it is for a weekly, than it is for a monthly out here. But what's nice is on any chart I can go ahead and I can apply all of them so we understand where price is moving to. Now yesterday, as the market was pulling back, what was kind of cool, if you're watching us on Tiger TV, now we don't use this to be exact out here, but you can see the solid lines, by the way, the solid lines are the larger floors. The middle line is the midpoint of those floors. So if we take a look at the large floor inside of the S&P 500, again, it's a weekly chart we're looking at, 2028. That's the level on any kind of a pullback. And what we saw the S&P do yesterday was get down to a low of 2034. 2034 versus 2028. Remember, this is basically the range. As long as the S&P is able to hold that area, and that in essence is was my target of my scary low. I don't expect the S&P to break through that level. If it does, then and it breaks it with any kind of conviction that says 1934. 1936 would be the price point where price could move back to. But I really suspect that what we will see is this 2028 level hold. These are the weekly numbers. If I switch over and I just simply add my monthly numbers to this, where's my monthly? Go up, display monthly. That's going to show up as some red lines across the screen. So what we can see here is we can see that the S&P has been boinging, if that is a technical tool. It's just simply been trading within the support level from a weekly basis of its horizontal trading range to the resistance level of the midpoint of its monthly area out at the 2,078 mark. The actual high that we saw a couple of days ago was 2,079.47. So we've got this little narrow band of where price is moving to. What does that help us do? Well, number one, if we see a break below 2,028, that actually says where we ought to see price fall back to is not the 1936 level, but 1971. That is the monthly bar that shows up on my screen. You see, if I switch the time frames here from weekly to monthly, and then I come over here and I'll just simply go ahead and I'll turn the weekly off just simply to not have it filled with so much noise. Here are the monthly numbers for us to pay attention to. So I believe that yesterday was that low, that next low that we see, over the course of the next couple of days out here before the markets resume their move topside and complete the Santa Claus rally. But they'll do more than that. It'll be more than a Santa Claus rally. It's most likely going to be a good 2015 out there. So the question is, do you buy the dips? The answer is yes, until proven otherwise out here in the marketplace. So that's what is going on with the S&P 500. I hope that assists you with your trading out there. It is Wonderful Wednesday. As always, thanks so much for joining us here at TFNN. Stay tuned. The second hour of the Trader's Edge is up next. But if you're off to start your day, have a safe one. Thanks again for being here, and have a wonderful Wednesday. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.